You know, something huge is happening in the global financial system right now. And we're not just talking about banking. Nope, we're talking about a fundamental rewiring of our entire financial lives. So let's dive into this massive transformation, this big idea called open finance.
Okay, the best way to get your head around this is to think of all your financial data like a new utility. For decades, right, it was locked away in these digital vaults controlled by individual banks. Open Finance is basically building a brand new, super interconnected highway for that data, letting it flow wherever you, the customer, say it should go. But like any powerful new infrastructure, it brings incredible potential and some really serious new dangers.
So, here's our game plan. We'll start by looking at how we got from open banking to this much bigger world of open finance. Then, we'll get into the core promise of all this open data. We'll explore how different countries are rolling it out, and they're taking two very different paths. After that, we'll flip the coin to the peril, the new risks this system creates. And finally, we'll talk about that crucial balancing act between innovation and stability.
All right, let's kick things off with where this all came from. Because this isn't just some small tweak. It's a giant leap into a new financial frontier, one that's building on an idea that's already started to change the way we bank.
So here's the absolute key difference. Open finance is the bigger, way more ambitious version of open banking. You see, open banking was mostly about your payment and checking accounts. Open finance takes that same idea of sharing data and applies it to everything else: your mortgage, your insurance, your pension, your investments, the whole shebang. It's all about creating one complete picture of your financial self.
And this really shows you the evolution perfectly. You know, we came from a past of proprietary banking, where every single institution kept your data in its own little silo. We're now in the era of open banking, where these standardized things called APIs allow some data sharing, but mostly just for payments. The future we're sprinting towards, though, is a fully connected open finance ecosystem, linking together every single part of your financial life.
Let's get to the promise of it all. How does this actually create a better, more efficient market? Well, at its heart, open finance is built on a really powerful economic idea that's designed to fix a problem that's been around in finance forever.
And that problem is called information asymmetry. It's basically the imbalance you get when your bank of 20 years knows every single thing about your financial history, but a new, maybe more innovative fintech startup knows absolutely nothing. This gives the big old-school banks a massive advantage, and it can kill competition before it even gets started.
Open finance is all about leveling that playing field. So first, you, the customer, give your explicit permission to share your data. Then that data gets shared super securely through standardized tech, and all of a sudden new companies can accurately figure out what you need and what your risk profile looks like. And what happens then? Real competition, which pushes everyone to offer better products and better prices.
And this isn't just some theory, we've got real-world proof. In the UK, the Competition and Markets Authority found that in just 4 years after open banking started, the new challenger banks were able to snatch an extra 4 percentage points of market share. That's a direct result of being able to compete on more even ground.
Now, what's so fascinating is that as this idea spreads across the globe, not everyone is playing by the same rules. Two main philosophies have really popped up, and it's creating this incredible, real-world experiment in how you regulate finance.
So you've got two camps. On one side, you have the regulatory mandate, which is what we see in the EU, the UK, and Brazil. Basically, the government steps in and passes laws requiring everyone to participate. The huge pro here, you get high adoption, and everyone is using the same playbook. The con, it can be kind of rigid and pretty expensive to keep up with. Then on the other side, you've got the market-led model, like in the US, where the industry itself gets together to create voluntary standards. This is way more flexible and can spark more innovation, but the big risk is that you end up with a messy, fragmented system where not everyone can talk to each other.
Okay, so we've seen the promise, but now we have to pivot. We have to talk about the peril. Because when you build this brand new, super connected financial highway system, you create entirely new kinds of structural dangers that we absolutely have to face.
And that really is the million-dollar question, isn't it? By solving that old problem of data being stuck in silos, are we accidentally creating new and maybe even bigger systemic risks?
And the sources lay out a whole spectrum of these new risks. I mean, you've got the obvious ones, right? Cybersecurity and data breaches, those get magnified in a connected system. But then there are the more subtle, structural dangers, like the risk of new monopolies forming, the operational risk if one key piece of this new infrastructure fails, and even just the risk that regulators can't keep up with the pace of change.
This quote just hits the nail on the head. It gets to the heart of the single biggest fear.
The very same network effects that help this idea grow so fast can also lead to a winner-take-all outcome. So instead of making finance more democratic, we could just end up with a few new gatekeepers, these giant super apps or tech platforms controlling the flow of everyone's financial data.
And look at this number, 80%. This is a stark warning coming from Australia's competition watchdog. They found that over 80% of the companies in their open data system are relying on just 3 cloud providers. I mean, that creates a massive concentration risk. It's a potential single point of failure for the entire ecosystem.
So all this brings us to the path forward. How do we actually capture the incredible promise of open finance without falling victim to its perils? This is the core challenge that every single regulator and financial company is wrestling with today.
And this balance sheet really sums it all up, doesn't it? For every single promise, there is a counterbalancing peril. The promise of more competition, well, that's up against the peril of winner-take-all platforms. The promise of incredible innovation, that's threatened by fragmented standards. And the promise of better financial inclusion could get twisted by the peril of discriminatory data profiling. Ultimately, it leaves us with this one critical question for the future of finance. We are, for all intents and purposes, turning our personal financial data into a new kind of currency. And the challenge for policymakers is to design a system that lets this new currency flow freely enough to spark innovation, while building in the kinds of safeguards that make that system resilient and, most importantly, worthy of our trust. That is the tightrope they have to walk.